Brien Lundin on the line with us today. Brien is the president and CEO of Jefferson Financial. He's responsible for publishing the Gold newsletter, and he hosts the New Orleans Investment Conference, which will be going on from November 10th to the 13th. Thanks for joining us, Brien.
Great to be with you, Colin.
Brien, you have an all-star lineup of guests and speakers attending this New Orleans conference, including Ron Paul, Peter Schiff, Mark Faber, and Dr. Ben Carson, to name a few. What can we expect to be the main themes being spoken about at the conference this year?
Well, the themes change these days on a daily basis, and that's one of the great things about the conference is you get some of the leading experts from across the world in one place at one time. And these are really monumental figures in geopolitics, economics, investing, and they interpret the headlines and they come up with specific recommendations. A lot of them do. And a lot of our analysts actually save their best recommendations or their best picks of the year for this event. So you're going to get an analysis that you cannot get anywhere else. And you're in an intellectual environment that's very stimulating and very idea-driven. And until people actually experience it, it's something that it's really hard to describe. But with that said, some of the overriding themes this year are obviously the Fed's monetary policy is very uncertain right now. We really don't know what's going to happen going forward with the taper. Personally, I believe that the economy cannot stand on its own right now without without quantitative easing, and I don't think that there will be a taper anytime soon, or if it does, it won't last for long. So I think that's generally supportive of the precious metals, mining stocks, and the like. And that's been an area where the New Orleans Conference has always specialized in and has always been able to give our readers our access to the top picks of the top experts.
And with gold showing some weakness over the past couple years, and particularly today, I would expect many of the speakers at the conference to say that we are at or very close to a bottom. Longtime investors in gold, and particularly gold equities, are struggling to hold on at this point. What do you expect moving forward, and what can we expect to hear from many of the speakers?
Well, personally, I do believe we're in a bottoming process. It's kind of a long, drawn-out process. We're still $100 away from the bottom that we set. Hopefully, was a bottom that we set in late June. So I think that what happened today is a sharp market reaction that's kind of indicative of the volatility you have during a bottoming process, but not indicative of a new direction down. And that's the feeling I get from talking to a number of our speakers who will be at the conference. I think that's a fairly popular view amongst our speakers. I think that everyone would agree that it's going to be hard to see when we'll have a very sharp uptick or an established trend upward in the metals and the mining stocks, but that the long-term view is very supportive. And it's just a matter of time before those factors, those dynamics kick in.
You're plugged in with some of the best and brightest minds in the gold industry. I just want to get a sense from you. What is the smart money doing right now?
Well, as I like to put it, if you're going to invest in this sector, you need two things: courage and cash. And it's not that easy to find both of those attributes in the same individual or entity. But some of the people who do, like Rick Rule, for instance, are actively buying. They're like kids in the candy store because they know that this is a very cyclical industry, and that you make the real money and you get potentially huge returns by buying at the bottoms of these cycles. And we've been through these before. And so they're buying actively. Personally, what I'm telling my readers is that this is a time when value is out there. It's on the clearance rack, as it were. And there's no reason to take unnecessary risks. You can buy juniors with established resources that are not necessarily 43101 compliant resources, but that you can look at it and know that they have a discovery, that they are building a resource. And you can get them for less than you would have had to pay for a grassroots exploration play 18 months ago. So these are the kinds of companies that you need to buy right now. The only exception to that would be a few plays that are in the midst of very dramatic drilling programs where you can, on occasion, invest in a company that has the cash to explore, that is actively drilling, and where you can expect some good news.
And before the call, we were chatting a little bit. You mentioned the 1997 to 2000 downturn that lasted 3 years. You stated that you never know how long these bear markets can last, but when it ends, returns can be absolutely massive. Is this where you see the point that we're at now?
Yes, I do. There's some really key inflection points that you can look back on. The 1990s bull market that we had was from 1993 to about 1997. Was minor in comparison to what we've gone through over the last 10 or 12 years in the metals. But still, that market was built upon the opening up of the world, new frontiers, developing economies growing. It was kind of a global renaissance of freer markets that fueled that little mini bull market, as it were. Then that ended. We had some other things going on, like the tech boom in the U.S. But for about 3 years, it was a very deep malaise in the metals and minings markets, and that changed in 2000. And what happened at that time was that we saw the Federal Reserve in the U.S. and elsewhere in the Western countries really begin to ramp up the monetary policy. In the U.S., it was in reaction to the tech wreck and some other things, and it was all concurrent with the developing nations, the very positive growth in China and in Asia. And all of that kind of came into its own around 2000, and the metals and the mining stocks began to take off. We had another setback in the 2008 credit crisis. But at that point in 2008, a lot of people don't realize that gold went up 150% over the next couple of years. So the bottom line is that this is a cyclical market. There are these setbacks, and we're in the midst of one of those right now. And it will end because the foundational drivers of the metals and the associated equities is the huge debt load in the Western countries and the rampant monetary printing, the monetary inflation that will be ongoing for many years to come because of these debt loads. And those fundamental factors will drive the markets higher over the longer term, but we just have to get through these cyclical downturns, these corrections along the uptrend.
And one last question finishing up here. As we conduct this interview, the government is once again back at its theatrics surrounding the debt ceiling, only this time the market doesn't really seem to care. The Dow's holding steady up a little bit, the dollar's about flat, and gold's down. What do you take away from people's reactions and how the market's viewing what the government and the Fed's doing at this point? Is it losing potency?
I think it's just a circus, and the financial markets are largely ignoring it this time around. If anything, it puts off a Federal Reserve taper for a bit longer, and therefore should be bullish for gold and equities. The fact that gold is off sharply today, I'm not a big believer in conspiracy theories. I don't think that the gold price is managed on a day-to-day basis. I do think that there are forces that come in periodically and at certain points to push the price through sell stops. It's actually been reported in a number of news outlets today that that's what happened at the opening bell for gold. The counterbalance to that, however, is that commodities across the whole spectrum of commodities are down today, so that would argue against that fact. But there was a tremendous amount of selling at the open today that has driven gold and silver and the mining stocks down. But I do think that's kind of a one-off event, and I don't think it's going to affect the picture for gold over the intermediate and longer term. And the government shutdown, it's actually a good thing over the long term for the economy if it actually forces some fundamental reforms.
Brien, thanks so much for joining us today. Where can our listeners go to learn more about the New Orleans Investment Conference and register for the event?
Very simply, www.neworleansconference.com. You'll find all the information on our agenda and all the exciting events that we'll have in November.
Thanks so much, Brien.
Thank you, Colin.